Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for Wednesday, the 29th of December. Wow, hard to say that. 2021, 6:50 p.m. Central Time. So how do you make something out of thinner volumes in the market? And that's what you're facing. Stock market volumes down dramatically, futures markets down dramatically, and now we're going to get thinner and thinner as traders start taking some time off. Looking at this as basically a Thursday, Friday, Saturday, Sunday, Monday vacation period. Yes, that's what they do. You can't change the nature of the beast. That's what happens. And on Tuesday, they start walking back in. You gradually build up interest in the market next week as we get past New Year's and traders start coming in. About a second week, you're full going in the market. It all happens very fast, but you're at the dangerous part right now. You'll see moves like I showed in the metal market where gold in a two-day period had a $40 range. For what purpose? None other than the traders are on vacation. So it's easy that a bigger order moves the market because you don't have the depth of market. That's what it's called, the depth of market, where you get the layers of all the bids and the offers in there that cushions it as much as it is. So you see that in natural gas. You've been getting wild swings. The cotton market, my gosh, has that been a wild one? Typical. So I don't see anything real different there. Now, is there a lot of economic news coming out? Yeah, we're going to get jobless claims. They're coming out tomorrow. You'll see that President Biden is meeting tomorrow afternoon about 3:30 in the afternoon with a video conference with Russia's President Putin. And again, the Russian president wants to make certain that our missiles are not going to be deployed in the Ukraine. It's similar. I understand his point against him, the way that we had Russian missiles on Cuba pointed against us. You may not agree with it. I'm not interested in that. I'm not interested in my thoughts either. I'm telling you what the arguments are. That's where we're at. And I'm going to stick to that policy this year. I have my own opinions, but that doesn't matter. The next thing is he wants to deal with the U.S. before he meets with NATO because at the end of the day, we're the powerhouse of NATO. Even though it's all on Europe's backyard, that's how it really works. So we'll see what comes out of it. They're searching for about a January 12th meeting between Russian President Putin and NATO members. If nothing comes out of that, my guess is the tanks go into first gear, the ground is hard, and they start moving. You don't have to agree with me, but that's going to be a powder keg. Can diplomacy solve it? That's going to be the big issue. So when we come to the market, how do you argue this? You're up 1.3%. The Santa Claus rally in full swing. You're up 64.5 points at this point. The market is in a bit of a stall. You can see that right through here. Now you're getting the choppy action. Okay. Will it be able to continue? Well, let's see. We do have all the bullishness set in place. We've had that. Looking back, you can see these challenges have been more frequent. And that's the point I want to bring up. More frequent recently of the 18-day average. You had a congestion of them back here in the October time frame, and now you're getting them again. And there's a lot of resistance right above you at 48.15. It was interesting to watch today. I was watching CNBC at the end of the day. As in the market wrap-up, everybody was saying how much up for the S&P this year, and they were from 5 to 10%. So that's what they're looking for 2022. Different parts where the traders think. I think that's fun, but you don't know. Nobody knows. Come on. You take markets a day at a time. That's how I do it. A week at a time. Beyond that, you're guessing beyond imagination. Okay. Are we going to embed? Now, embedded occurs if you're a student of slow stochastics when the two numbers, the red and the blue, they're called a K and a D line, go sideways over 80 for several days or more. You're not there yet. You can't count where you're at tonight, so you had your first day. That was it. You're overbought. An overbought market that's bucking up against resistance at the 48.15 level. In the NASDAQ, overbought, you've hit your upside targets, market's done what it has to, and it's not trending right now. In a true trend, as a chartist, you're looking for patterns of higher lows, higher highs. You don't have that. You have a lower low and a higher high. This was a vertical move that finally stopped going that way. You're in your pause, and I'd expect that to be one of the cases here as we get into thinner and thinner trade in front of the holiday. You have the same thing in the Dow, lower low, higher high. You had your Santa Claus rally. If you don't think this is it, what's your definition of it? There are a couple of markets that didn't give you what you want. The Russell, I think I nailed it when I said big resistance at these numbers. Overbought. I don't expect an awful lot more out of that right now. And in the VIX, as long as it keeps pointing lower, you keep the stock market going. The moment you see it stick its neck back up here, especially if it gets over this, let's call it 1941 level, be careful. You're probably getting your a break the other way in the stock indices. Right now you have the embedded reading, a lot of resistance. I think if you get to 1420, you will see aggressive put selling. They'll try to tame it to get the markets first back into this region as a profit objective with the ultimate one of 2090, which would mean a good stock market crash if that occurred. In the bond market, well, this is the first objective to the downside. It's also oversold. I think the pros took their money off the table just now. Today, they called it a day. If you can get down there in the 10-year notes, I think they'll do the same in this market. You're close enough where I expect professionals to come out of positions on the short side. Dollar index was a nasty trade today. Looking at this, I would have thought if you buy the market right over this high here of 96.24.5, put a stop under the low here, that you'd get clear sailing to the upside. Boy, was I wrong. You first took the market to the upside, got through there very nicely, and then started working your way down until you got to the lower Bollinger Band. That was a complete failure. Well, if that failed, guess where the euro went? To the upside. And away you went on that, and you can see you went right to the upper Bollinger Band and you stopped there. This is that nonsense trading now where you don't get the follow-throughs, just going in sideways action right through here. The British pound's still friendly. There aren't a lot of options for the Brits to do about the COVID except this. They haven't done anything, but they're much further along their COVID path than the United States is. I saw today Dr. Fauci come out today and say that he would expect that we have peaked by the end of January. That's exactly what I was saying yesterday, but I'm following what he says. So he just said it again. And I think that's going to make for one heck of a rebound in Europe in their economies as long as the Omicron stays as the absolute top king of the heap. If it can keep other variants from not becoming the dominant variants, and this is as bad as it gets, that's a good thing, not a bad thing. When we take a look at Bitcoin, again, sank right back down. So you got back after this correction to the 18 and came right down here. I'm watching on TV today as everybody's talking how phenomenal an investment Bitcoin is and where it's going to go. I'm not arguing. That's not my point to do. I can tell you it just went from $70,000 to $45,000, so I don't consider that an easy break in the market. It's under key resistance. Right now it's got key resistance at the 100 in the upper Bollinger Band, so we'll see where it goes over time. The differential in the Brent and WTI keeps coming back together, and these are still very strong markets developing their embedded readings, which tells me still locked in bullish. Again, CNBC, I was looking to see the prices. They did a survey of people that watched the show, and the survey came out where most traders think it'll be around the $80, $85 range for 2022, and that's where many of the pros thought it would be. I think, again, it's folly to try to guess that. You just don't know where you're going to be, but strong economies don't bode for a big break in prices in energy, and that, to me, is the important part. Fully embedded, I expect to see big support on breaks in these markets until you lose that embedded reading. And as I said, you get these crazy swings in nat gas. You do realize you got down here on December 23rd. This is only the 29th. You got to 386, and then you get right on up to 403, 407, just so you can see it. And that, to me, is wild trading. That's $20, just like that. Is there any rationale behind it? Probably not. You know, our firm writes about all this in detail. We're commodity people that handle commodity people. So we have clients that, many of them self-directed, others broker assisted, but they want our research. They want to know what we're offering, what we're doing, what we're thinking of energies, metals, interest rates, stock indices. It's all covered. We send it to our clients in two different ways. Number one, they can get it by email, just goes like that, and we're writing them throughout the day. The second way, everything's inside of our charting software, both mobile, desktop, tablets, it's all there. Top trades, special reports, whatever you're looking for. So if you're looking for something from commodity people about commodities, spreads, options, futures markets, this is the place. It's free to you to give it a try. Simply call my staff and/or go to our website. On the upper top left, you're going to see free offers. Take advantage of it. What do you have to lose? I'm Ira Epstein. You have a good day. That's your one winning offer for the week. What? No risk to at least look at the information. Take care.